हॅलो 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 पवर आहे कसं आयपॅड घेतलं असतं फील पण पाहिजे असतं. हॅलो 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 सर पेनड्राईव्हमध्ये केलं कॉपी दोन्ही तुमची प्रोफाईल आणि हे दोन्ही कॉपी करा ना. संदीप आयपॅड आयपॅड थांबा एक मिनटं सर एक मिनटं थांबा आपण कनेक्ट करू. ईमेल अकाउंट उघडता का सर एक मिनटं कनेक्ट झाले फक्त ईमेल अकाउंट उघडून ईमेलला लगेच पाठवून द्या. हां चालेल. एकच मिनटं, मी फक्त एक मेल आय डी टाकून देतो तुम्हाला. सीबीट हां, मग कसं डायरेक्ट याच्यात प्रेझेंटेशन होऊन जाईल. सर प्रोफाईल पण सिलेक्ट करून घ्या आता. एक मिनिट, नाही काही इश्यू नाही त्याचा. ठीक आहे ना, मी याच्यात करून घेतो. नाही सर, प्रोफाईल नाही अटॅच झाली. कंट्रोल सॉरी, डायरेक्ट याच्यावरच अपलोड करून टाकतो ना. टॉपिक हाच ना. झालं मॅम, झालं नाही झालं माझं, केलं मी, केलं मी, सगळं झालं. तर इथंच हॅलो, हॅलो, okay. So a very good evening to all of you. Now we have sort out all the technical glitches what we were observing. Now we can start with our CEP. Thank you for your patience. So am I audible clearly, or do you want to do some adjustment in the voice? I know after doing this adjustment, there won't be any challenges for the voice. Okay. So, good evening, everyone. A warm welcome to everyone on this evening. So, on behalf of Pimprinchor chapter of Institute of Cost Accountants of India, is delighted to welcome each one of you for the today's CEP, that is a continuing professional education program on the critical case studies and the recent changes under the cost audit. It gives immense pleasure to me to host this insightful program in a physical mode at our own CMA Bhavan of Pimpri chapter. We thank you for taking the time to join us on this Sunday evening. I can understand Sunday evening is very difficult to take out some time from your busy schedule, and of course for some family commitments are there. But for learning purpose, today you are here. So let's have a clap for all of us, because we should also can we have some, there is some reason behind this, because from last half an hour we were struggling to start the CEP, but now we have started, so some energy were on the downside, so that's why I wanted to have that energy on the higher side, so that's why I thought to have a clap for all of us. So today we are honored to have with us CMA Rahul Kute sir, a practicing cost accountant with deep industry insights and experience. So if I talk about the Rahul Kute sir, he is a proprietor of the RCK and cost accountants. His qualification, if I want to say, he is a FCI, that is a FCMA, that is he has taken the fellow member of the Institute of Cost Accountants of India, and he has completed his Bachelor of Commerce, that is BCom from the Pune University. CMA Rahul Kate sir is a seasoned cost accountant with over 10 years of experience in cost audit, cost record maintenance, cost system implementation, inventory valuation and the inventory verification. Since earning his CMA certification in the year 2024, he has been dedicatedly working to optimize the cost structure and the financial efficiency for the various industries. His area of expertise is from the cost audit and compliance, cost record and maintenance, costing system implementation, inventory valuation and verification, indirect taxation. He has been a faculty for the indirect tax at Akodi chapter of the Institute of Cost Accountants of India for the 2017 batch. He is also a faculty of the cost audit in Pune chapter of the Institute of Cost Accountants of India for the 2022 batch. He is also visiting faculty for the subject of the cost audit and the maintenance of the cost records, GST, e-way bill at various colleges. He has been a visiting faculty for the IOTP and pre-placement orientation program on the cost audit at Pune chapter. So let us welcome CMA Rahul Kate sir on this evening. Now with this, I'll request CMA Rahul Kate sir, please start your today's session. Now before that, I request Ahuja sir to felicitate CMA Rahul Kate sir for this evening. So guys, can we have a round of applause? Ahuja sir, okay. So with this, I'll request CMA Rahul Kute sir to start for the today's CEP.
Hello. 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 Thank you, Sagar sir and Pimpri chapter for giving this opportunity for sharing some points regarding cost audit. The purpose behind the session is whatever little bit knowledge I have in cost audit that I want to share with some members on some platform. So I insisted to Sagar sir that can we have one session on cost audit where I can discuss some hypothetical cases where I feel that everyone should know that what we are doing and what best we can do. Okay, so these case studies, I cannot say these are the case studies, but these are the critical aspects on cost audit, and along with the critical aspects, I have covered the changes in recent changes in cost audit. So that changes might be in the MSME Act, that might be in FAQs which are released by the Institute of Cost Accountants of India, and how that impacting our profession. So this is the subject, critical case studies and recent changes under cost audit. Now in this session we are going to take cost audit applicability and appointment of cost auditor. So whatever critical aspects are there, that I will discuss. Then analysis of annexures to the cost audit report. So everyone is preparing the annexures, but which point should we analyze and how that points are relevant with the annexures, that we are going to see. Then I will talk on some points like capacity utilization, cost center booking, then unusual items of reconciliation. We know the regular items of reconciliation which we are going to which are reporting in annexures to the cost audit report in part D2, but there are some unusual items also. I want to know how all are treating with them and how we are also treating with them. So this is the fourth point. Second last is recent changes in forms. So recently MCA has shifted from V3 to V2 to V3. So there are changes in CRA 2 form and CRA 4 form. So that also we are going to see. Then last one, the penalty provisions under cost audit. So if I have not if the company has not appointed the cost auditor within time, so what are the penalty provisions? If the company has not filed the cost audit report within time, what are the provisions? If there is a lag in appointment and submission of cost audit report, so what are the consequences and what are the penalties in terms of with respect to company as well as cost auditor? So that points we are going to see. So this is one kind of disclaimer you can say. So these are the hypothetical cases, and our opinion may differ from case to case. So your opinion might be different, my opinion is might be different. So there is a first point is there is a change in MSME Act. The definition of micro, small and medium enterprises definition is changed. Earlier, both the criteria were there, turnover and investment in plant and machinery, but the threshold limit was very less. Now it has increased to some extent. So for micro enterprises where the investment in plant and machinery does not exceed 2.50 2 crore 50 lakhs. Earlier it was 1 crore. Now why I am taking this point, I want to correlate this point with the applicability of cost audit and cost record. So how it is impacting to our applicability of cost audit and cost record. So first definition is a micro enterprises where the investment in plant and machinery or equipment does not exceed 2 crore 50 lakhs. Earlier the investment criteria was 1 crore rupees and turnover does not exceed 10 crore rupees. That turnover criteria earlier was 5 crore rupees. Okay. Next, small enterprises definition is also changed where the investment in plant and machinery or equipment does not exceed 25 crores. Earlier it was 10 crores. 10 crores rupees, and turnover does not exceed 100 crore rupees. Earlier it was 50 crores rupees. So small enterprises and micro enterprises definition is changed to the extent of investment and turnover also. Next is medium enterprises. For medium enterprises, see, as per as medium enterprises is concerned, there is no exemptions to medium enterprises for maintaining the cost records. Okay. For micro and small enterprises, there is a exemption that if you are falling under the definition of micro and small enterprises, you don't have to maintain the cost records. Okay. But as per as medium enterprises is concerned, the exemption criteria is not applicable. So definition is changed. A medium enterprises where the investment in plant and machinery or equipment does not exceed 125 crores. Earlier it was 50 crores, and turnover does not exceed 500 crores. So earlier it was 250 crore rupees. So almost double the turnover threshold has increased. Now, after these definitions, there is another change in the definition, that is how to calculate the turnover. Okay, so while calculating the turnover for the purpose of deciding the category of the enterprises, whether it is small, whether it is micro, or whether it is medium enterprises. So the turnover calculation is given in the MSME Act. What it says, that export of goods or services or both shall be excluded while calculating the turnover of the enterprises, whether it is micro, it is small, or medium enterprises. It means if the company falls under the medium enterprises earlier, okay, and the turnover is, let's say, total turnover is 150 crores of medium enterprises, and out of 150 crores, 100 crore is export. So while calculating the turnover for the medium enterprises, we have to exclude the turnover of export. So it will fall to 50 crores only. So the nature of that medium enterprises convert from medium enterprises to small or micro enterprises. So that is the change with respect to cost audit. So if the company earlier falls under the medium enterprises, if their turnover from export proceeding is higher and its turnover goes below the 100 crores, then that will categorize under the small or micro enterprises, and small and micro enterprises cost record and cost audit is not applicable. Okay. So this is the important change as per as definitions are concerned. Next, I have taken some cases where see, we have to decide the applicability of whether it is small, whether the cost audit is applicable or cost record is applicable. If the investment in plant and machinery is 8 crore, total turnover is 60 crores, export turnover is 10 crores, and domestic turnover is 50 crores. Okay. Now we have to decide whether it is small, whether it is micro, or whether it is medium enterprises. So as per as the criteria is given, it falls under small enterprises. And for take an assumption that the company falls under, or the products manufactured by the company falls under the table B of cost audit and record rules. So whether the cost records are applicable to the company. Why? Why? It is small enterprises. So the cost records are not applicable to the small enterprises. As the cost records are not applicable, cost audit will also not applicable to the company. Okay. If the investment is 12 crores, total turnover is 85 crores, and export turnover is 50 crores, so domestic turnover is 35 crores. Whether cost records are applicable? So first tell me the classification whether it is small, micro or medium enterprises. It will be small enterprises. And cost records are not applicable to the small enterprises. Okay. Now, if investment is 30 crores, total turnover is 220 crore, export turnover is 130 crores, and domestic turnover is 90 crore. It is small, micro or medium enterprises? It is medium enterprises. Okay. So for medium enterprises, there is no exemption. The exemption is for micro and small enterprises. Now we have to decide whether cost records are applicable. Yes, because the threshold limit of 35 crores is exceeding. Now whether cost audit is applicable? No, because the turnover criteria is not getting fulfilled, that is 100 crore. This falls under micro enterprises, next company. So the cost records and cost audit is not applicable to the company. Okay. Now the turnover is 300 crores, investment is 50 crores, export turnover is 120 crores, and domestic turnover is 180 crores. It is medium enterprises. Whether cost records are applicable? Yes. Whether cost audit is applicable? Yes. 22 crores is investment, 120 crore is total turnover, 30 crore is export, and 90 crore is domestic turnover, domestic proceeding. Whether cost classification is small enterprises and cost records are applicable to the small enterprises? No. And cost audit is also not applicable. Okay. Last one is 120 crores is the investment, total turnover is 500 crores, export proceeding is 250 crores, and domestic turnover is 250 crores. So it falls under medium enterprises, and cost records and cost audit is applicable to the company. Okay. This is one part. Okay. Now this don't think that this session will be linked to each other. So first part is over. So we have completed the definition of MSME, and we have concluded that how it has impacted to the cost records. Now second is applicability in case of product under consideration are covered in table A or table B. Okay. The case is that if I am a manufacturer of the products and I am manufacturing two products, let's say product A and product B, or product X or product Y, and X is falling under table A and Y is falling under table B. So whether and how the cost audit and cost records will be applicable to the me. Now first of all, for regulated industry the criteria is 25 crores and 50 crores, and for table B the criteria is for non-regulated sector, the criteria is 35 crores and 100 crores. Okay. Now I am manufacturing two products, first is covered under table A, second is covered under table B. Total turnover I have taken here, other products turnover is there also there. Now we have to decide whether cost records are applicable and cost audit is applicable to the company. Okay. So first point is product cover under table A is A's turnover is 5 crores, table B products turnover is 10 crores, table A and B both turnover is 15 crores, other products turnover is 19 crores. So total turnover is 34 crores. Whether cost records are applicable? No. Whether cost audit is applicable? No. Okay. Product A turnover is 5 crores, product B turnover is 10 crores, both products turnover is 15 crores, other products turnover 25 crores, and total turnover of the company is 40 crores. Whether cost records are applicable? Whether cost records are applicable? Yes. The criteria for cost record maintenance is the total turnover of the company should be more than 35 crores. There is no criteria like there should be a turnover of individual product or product under consideration should be 10 crores, or there should be a there has no any threshold limit for individual products turnover. The turnover limit is given only for company as a whole. If the turnover of the company as a whole is more than 35 crores, then the cost records are applicable to the company. Subject to there should be a minimum 1 rupee turnover of product under consideration. If there is zero turnover of table A, product covered under table A or product covered under table B, then cost records are not applicable if the turnover is more than 100 crores. There should be a minimum turnover of product covered under cost audit. So cost records are applicable, but cost audit is not applicable. Now table A, products turnover is 10, B products turnover is 15 crores, total turnover of A and B is 25 crores, other products turnover is 26 crores, and total operating revenue of the company is 51 crores. Whether cost records are applicable? Yes, because it is crossing the threshold limit of 35 crores. Whether cost audit is applicable? Cost audit is applicable to the product covered under table A. Why? Because the turnover criteria is applicable for product table A is your turnover of product under consideration. The criteria is not given only for the product covered under table A. It is given for table A and table B. So if the turnover of both the product is crossing the limit of 25 crores and your total turnover is more than 50 crores, the cost audit is applicable to the product covered under table A. It is not applicable to the product covered under table B. Why? Because total turnover is not crossing the limit of 100 crores. Because 100 crores criteria is for table B product. So cost records are applicable to the company, and cost audit is applicable to only the product covered under table A. Now product A turnover is 0, table B product covered under cost manufactured is 25 crores, total turnover is 25 crores, other products turnover is 26 crores, and total turnover is 51 crores. Whether cost records are applicable? And what about cost audit? Cost audit is not applicable to the any product because the turnover from table A and table B is not more than 35 crores. So product covered under table B, the cost audit will not applicable. So cost audit will not applicable to the product. Now product under table A is 20 crore, table B is 14 crores, total turnover is from A and B is 34 crores, other products turnover is 75 crores, and total turnover is 109 crores. Whether cost records are applicable? Yes, cost records are applicable. Whether cost audit is applicable? For only table A, because total turnover from table A and B is not more than 35 crores. For table B product, the turnover of individual products must be more than 35 crores. For table A product, the turnover must be more than 25 crores. So 25 crores turnover is crossing here, because here the both products turnover is 35 crores. So it is crossing the threshold limit of 25 crores. So cost audit is applicable to the product under table A. Okay. Now product A turnover is 20 crores, B is 20 crores, both turnover is 40 crores, other products turnover is 61 crores, and total turnover is 100 crores, 101 crore. Whether cost records are applicable? Yes, and cost audit is also applicable to both the products because both the criteria are getting fulfilled. Now Institute has issued some FAQs in 2015 and recently in 2024 also the FAQs are released. So there is one change in the definition of turnover in FAQ. Earlier the other income was covered under the turnover definition. Now it is excluded from the definition of turnover. Means if we have to decide the applicability, we don't have to consider the other income portion of total turnover. If my total turnover, let's say total turnover is 101 crores, and out of that other income turnover is 2 crores, then we don't have to consider that 2 crore for checking the applicability of cost audit. So we have to consider only 99 crores of turnover for applicability checking. Okay. So the definition was earlier the turnover as the aggregate value of realization of amount made from the sale, supply or distribution of goods or on account of service rendered or both by the company during financial year. For the purpose of these rules, turnover means gross turnover made by the company from the sale or supply of all the products or services during the financial year. It includes any turnover from job work, loan license, operations, but exclude duties and taxes. Okay. So here duties and taxes तक ही उसको सीमित रखा है. Export benefit received should be treated as a part of sale. Now the definition or turnover definition given in FAQ of 2024 is, see last para, it includes other operational income from job work, loan license, operation, scrap sale, trading turnover, export benefit, etc. but excludes duties and taxes and other income. So other income is excluded from the definition of turnover. So this is the change, and that also impacting the applicability of cost audit. Now we will see some case studies what we are doing and how others are doing. Means this point is might be for discussion also. So this is the question, if cost audit becomes applicable to the company for first time, means let's say in 2024-25 company is doing cost audit first time, means for in 2023-24 the turnover might have crossed the limit of 100 crores and 35 crores. Okay. And there was no cost audit conducted in previous year. How should the previous year figures to be reported in current year's cost audit report? Should the company leave the blank, provide unaudited figures, or restate based on the available records? So what is your opinion? No blank. Okay. Leave it blank. Okay. Based on cost records. So we have to fill the figures based on the cost records. Okay. Anything else? Okay, so you mean you have to report the cost audit figures for previous year. Okay. Anything else? Okay. What I personally feel that if in the last year company has crossed the limit of let's say 100 crores. Okay. In the previous year of that year, let's say in 2022-23, company might have crossed the turnover of 35 crores. It cannot suddenly go directly from 35 to 100 crores or 25 to 100 crores. So gradually the turnover might have increased. So if for the year 2023-24 cost records are applicable, what is meant by cost records? Cost records means company should maintain the cost records as per Form CRA1. Okay. Form CRA1 means there is a guidelines given by the institute that how the cost record should be maintained. Okay. So if the cost records are applicable to my company in previous year, it means I have to maintain the cost records, I have to maintain the cost sheet, and I have to maintain it in a cost statement format. If everything is ready with me for previous year, because cost records were applicable to me and I have maintained that cost records. It means I have maintained the cost statements. So that figure should be get reported in current years in previous year column. So legal background is what? That if the cost records are applicable to my company in previous year, that means I have maintained the cost records. Only the question is whether I have to report that in current year or not. We have to report because the cost records were applicable to the me. So if the company, second example, okay. So it is clear that if the cost records were applicable to me, then I have to report the cost audit previous year's figures in current year cost audit report. Now second scenario might be if earlier the company was LLP and in the month of, let's say, December, it has converted to company. Earlier it was LLP, now it has converted to. Now for that company, whether cost records for previous year were maintained? No, because in that previous year, previous to previous year, the status of the company was LLP. So cost records were not applicable for 2023-24. So cost records were not applicable to the company in 2023-24. Hence, there is no need to report the cost audit report, cost audit figures in current year cost sheet. So we have to check the situation also or scenario also, whether we have to report the figures, it is mandatory or not. What is your opinion? Yes? These figures will be unaudited. Previous year figures will be unaudited, and that note also we have to maintain in our cost audit report. If you see the cost audit report CRA 3, there is one sentence that comparative figures for previous year that have reported in current year and that might be restated. Okay, that note we have to report. Instead of that, we have to report that previous year figures are unaudited and that are provided by the management. So this practice we are following. Now next, second situation is in a situation where the company intend to appoint a cost auditor for 2 consecutive financial years. Means the company got the notice from MCA that your turnover is crossed from last 2 years and cost audit is applicable to you from last 2 years. So if the company is filing CRA 2 for 2 years, whether it is eligible or it is problematic. So can the company file the single form CRA 2 covering both the years, or it is mandatory to file CRA 2 separately for each financial year? So my opinion is there is no such criteria or there is no such rule that you should file the separate CRA 2 for each year. But the problem is what? For filing CRA 4, we have to report the SRN number of CRA 2. At that point, so we have faced these cases. So at that time, that SRN we have generated for 2 years. So that is not linked to any year. That was not linked to any year. So at the time of filing CRA 4, that is not fetching the SRN number of CRA 2. So it is suggested that for each year you have to file CRA 2 separately. Okay, third case study is once the cost audit becomes applicable to the company, if any subsequent year the turnover falls below the prescribed limit, is the company still required to continue cost audit for the year, or can it be discontinue appointment of the cost auditor? If the cost audit is applicable, that is beneficial for us. So we can say it should continue. Earlier in FAQs released by institute, the FAQ answer was once the cost audit is applicable or once the cost records are applicable, it is applicable forever. But now in 2024, the institute has revised the FAQ, and the criteria is given only if the turnover is coming below the threshold limit, then we have to check the applicability. If the cost audit is not applicable, the cost audit not required to do the cost audit. So the FAQ is changed from previous period to current period, that once cost audit is applicable always, no. Now we have to check the threshold limit criteria for each year. But what we generally suggest, do the cost audit for next 2 years, because in 1 year that might falls below 100 crores. In next year it might go 100 crores. For that 100 crores, yes, we have to prepare the previous year of last year also. So it is as good as we are doing the cost audit of previous year also. So it is suggested that if it is going below for continuous 2 to 3 years, then you should discontinue the audit. Otherwise, if you are feeling that that might go beyond 100 crores, so you should continue the audit. But this is the change in FAQ. चहा नाही घेत मी, चहा नाही घेत, पाणी द्या फक्त. Now next point is regarding captive generating plant. Next point is related to captive generating plant. Means this, why this point is important, because there is one FAQ related to this point in recent FAQs. So what is captive generating plant and why we are taking this? Because there is an exemption to captive generating plant from cost audit. If the electricity generated by the captive generating plant and that is consumed by the manufacturer, then cost audit is not applicable to the company. Now what is the criteria or what are the definition under captive generating plant is? First, captive generating plant might be of two type. First, a manufacturer company is having a captive generating plant in its own premises, in its own plant, and it is generating electricity and consuming for manufacturing its other product. Other scenario is 2 or 3 companies are coming together and establishing one energy plant, and they 3 or 4 companies all are generating electricity and consuming for them only. These are the two situations. Okay. In first situation, there is an exemption. So there is exemption for both the criteria, because the definition of captive consumption plant is the investment should be more than 26 crores, 26%, and the captive electricity generated should be consumed more than 51%. If I am generating electricity, let's say 100 units, and I am consuming 51 units internally, and the investment or ownership of that electricity plant is more than 26%, then cost audit is not applicable. If you are selling 49% of electricity to MSME or KSEB or whatever the case may be, so cost audit was not applicable as per the exemptions. Now for second scenario, if the consumption is more than 51% and ownership is more than 26%, in that case also the cost audit is not applicable, because there is an exemption in the rules itself. Now FAQs are cleared. What FAQ said? The second criteria, second case is coming under the exemption limit, but first case is not coming under the exemption limit. So if I am a manufacturer and I have owned CPP plant, captive generating plant, and I am consuming, let's say, out of 100 units, I am consuming 90 units for myself and I am selling 10 units outside the premises, then cost audit is applicable to the electricity product. In second case, no, cost audit is not applicable. You are getting, means captive generating plant have two scenarios. First is my own premises is having electricity generating plant. I am generating electricity and out of that I am consuming partially and selling partially. So there is no criteria you should consume more than 51% and you have an exemption. So no. If you are consuming 90% and you are selling 10%, cost audit is applicable to you. So as per as FAQs are concerned, the exemption is not for first scenario, that exemption is for second scenario. Means 4 or 5 companies are coming together and establishing one electricity plant and they are consuming more than 51% of electricity there and selling 49% of electricity outside the factory or outside the market, then cost audit is not applicable to the electricity product. So that is captive generating plant. Next point is treatment. So these are the discussion points. Treatment in annexure to the cost audit report in case change of chapter heading at the time of selling of the product. If you are doing cost audit, you might have faced this situation that in last year the stock was reported, closing stock was reported under chapter heading 8.4 and at the time of selling it is reported in let's say 8.7. So how we are treating with that? If the chapter heading means what? In last year's cost audit report, we have reported that product or that stock in chapter heading 8.4, which is covered under cost audit. Now in current year, the product is sold under the chapter heading 87. Okay, and for that, cost audit is not applicable. So how should we deal with these situations? And this is normal scenario. Many companies are changing the chapter heading, though the chapter heading mention in their item register or item master as XYZ. At the time of selling, if customer demanded, I want this chapter heading, then company have to give on that chapter heading only. Because we are facing some cases that for export, for getting benefits, they have to charge the product at 9.4, and if they want to sell in the market, they have to, in domestic market, they want to charge, customer want 8.5 chapter heading. So the cost audit is applicable for 8.5 and for 9.4 there is no cost audit. So how we should deal with this situation if there is a change in the chapter heading? Anyone have any idea or how you are reporting in cost audit report? Okay, so what we do generally, we have a one option in the cost audit report or annexures to the cost audit report, that is captive consumption. Okay, if I manufactured in last year in one product or one chapter heading, and now I have sold that product in another chapter heading. So I can shift that product with the help of captive consumption from audited to unaudited. So here will be my credit. So whatever product I have transferred from audited product to unaudited product, so I will give the credit to audited product and I will charge debit to unaudited product. So that will the option for changing the cost, chapter heading. Next scenario is if the cost audit is not applicable to trading activity. See, if the cost audit is not applicable to the cost trading activity, then why is separate reporting required under para B1 and para B2 for the cost audit report in form CRA3 for trading operation. See, the cost audit applicable only for manufacturing activity. But in annexures to the cost audit report, in part B1 and part B2, in B1 we have to report the quantity, in part B2 we have to report the values. In part B1 there is an option to report purchase of finished goods, quantity of purchase of finished goods. Means what? Whatever we are manufacturing, that we have purchased from outside and that we have sold in the market. It is as good as trading. So why there is a difference in the statements? If I am saying there is no cost audit applicable to the trading activity and I am reporting that trading activity in the manufacturing or annexures to the cost audit report. Yes? There will not be a reconciliation of trading and manufacturing product. Yes, correct. My opinion is that this these transactions which we are reporting in part B1 and B2 are incidental to manufacturing. Means what? If I have to fulfill the let's say order of 10 metric ton, but my capacity is manufacturing let's say per month 9 metric ton. Now I have to purchase that 1 metric ton from the market and I have to fulfill the sale. So if there is an incidental sale or incidental purchase for my manufactured product, then I have to report over here. Otherwise, my intention is to buy finished goods and sell in the market, then that is of course a trading activity, and that trading activity will be reported as an unaudited product in part D2 of annexures. So whatever incidental sale of finished goods I am doing, that should be reported over here. Otherwise, trading activity, pure trading activity should be reported. Profitability of that trading activity should be reported in annexures to the cost audit report in part D2. Okay. Next, comparison of inventory valuation as per cost records and as per financial records. So this point generally we check in our annexures to the cost audit report, that valuation of closing inventory or closing finished goods we are reporting in cost statement. Okay, let's say for example of take an example of steel manufacturing industry where I am manufacturing steel bars. Okay, the product is same, there is no variation. I am manufacturing metric ton and selling in metric ton. So whatever cost, see what AS2 is saying, the cost or NRV whichever is less, that we have to value the closing stock. Now if my cost of production per unit is coming let's say 70 rupees per kg or 70,000 per metric ton, and my valuation as per financial records is let's say 75,000. So there is a gap of 5,000. If I multiplied that 5,000 gap with my closing stock quantity, the difference might be huge. 5,000 is for per unit or per metric ton. So difference might be very huge. So how we deal with that? Because both the figures we are getting from the cost statements itself, because we have to report the closing stock of finished goods as per the financial records, and that value derives from the financials. Now how we calculate the cost of production? As per annexures to the cost audit report, and we have a conversion cost, then change in WIP impact, then after deducting scrap value and adding primary distribution, primary packing cost, we arrive at cost of production. So cost of production per unit we are getting there, and if I divide closing stock value with my closing stock quantity, I will arrive at 75,000. My cost of production is coming 70,000. So how we deal with that? So this is the analytical point of annexures. So if there is a major change or major variation in the value of cost inventory, then we have to report under or over valuation in annexures to the cost audit report part D2, where we have to report the difference between over and under absorption of inventory. if we see the format of part D2, first is profit as per cost records, second is profit as per financial records, then income not considered in financial records, cost records, and expenses not considered in cost records. After that, there is a point where we have to report under or over valuation of inventory in part D2. Okay, so as per as the difference is concerned, if the difference is very huge and it is impacting the inventory valuation, then we have to report that under or over valuation in annexures to the cost audit report in part D2. Okay. Next, comparison of purchase or sale rate with related party transaction. So this is interlinked, interlinking of annexures with part 1 to part 2 or part 2 to part 3. Likewise, I have taken these points. So my point here is, I have to report the related party transaction in part D5, where I have to report the quantity also, value also. So I might get rate also there, per unit rate. That in case of I have sold something to related party which I am manufacturing, so per unit charge to that related party, and whatever cost sheet I am reporting in my annexures, the rate should be same, or there should not be a major deviation in the rate. If I am purchasing, so in part B2, I will get the sales rate per unit, where I am reporting everything, every item of cost. I will arrive at cost of sales, then I will come to sales price, and I will arrive at margin. So I have a sales rate per unit in my B2, and also I have a sales rate in part D5, where I can check or analyze the rate if there is a major variation. In case of MNC companies, this might play major role because transfer pricing is applicable to them. If there is a major variation, then I am facing many cases where the companies, MNC companies, are asking the cost audit report for transfer pricing, because the price is correctly reported in cost audit report. There is no any manipulation in the cost audit report if it is done correctly. So many transfer pricing auditor are insisting for cost audit report to check the cost of the product. Okay, so this is the point where we can check the sales rate with D5. Also, in case of purchases, we can check the purchase rate of raw material. If I have purchased something from a related party and I am reporting rate per unit in D5 part, likewise I have to report consumption in raw material consumption part D2A, B2A, where I have to report item wise consumption for top 10 items. If out of that top 10 item, one of the item I have purchased from the related party, there is also a rate comparison in purchases. So these are the 2 points, sales and purchase rate we can check from the related party transactions. Next, analysis of annexures to the cost audit report. Comparison of consumption as per FI and CO module, and reconciliation for the same. Generally, there is huge difference in consumption as per FI and consumption as per controlling module. So what you feel that what are the reasons behind differentiation between CO module and FI module, means finance module and controlling module? So consumption arrives in CO module is as per standards. So whatever bombs we have prepared, the consumption is arriving from that bombs, or whatever quantity we have produced, that is multiplying with the bomb and we are getting the consumption. Okay, so there is a difference also, means one of the reason is the rate which is taken by CO module is standard rates. On standard rates, it is capturing the consumption, whereas in financial module, we are actually booking the purchases, we are actually reporting the inventory. So there is one point is one depreciation point is rate of materials. So in bill of material or in CO module, standard rates are taken. So cost run is there, but still that rates are standard. Another point, in bill of material, the rate is not at landed cost. Okay, if I have purchased something from outside country, I have to pay custom duty, I have to pay inward freight charges, I have to pay insurance. So that expenses are huge in many companies. If the import is sizable, the import expenses are very huge. So that also plays a differential role in CO and FI module. So landed cost are the part of financial module, but it not part of our CO module. So rate and landed cost might be part of differentiation point. Okay. Next point is in this consumption only, packing cost. How we differ packing cost in consumption? Because as per guidelines or as per cost accounting standard or as per CRA 1, there should be a differentiation in primary packing cost and secondary packing cost. Okay. Companies are preparing BOM. They don't have to do with whether it is primary packing or whether it is secondary packing. They charge or they consider everything or every packing cost as a part of bill of material. So in financials, in financial module or in CO module, it comes with the packing cost only. So material consumption comes with packing cost irrespective it is irrespective whether it is primary packing cost, secondary packing cost. Now why differentiation is required? Primary packing cost is a part of your cost of production and secondary packing cost is part of your cost of sales. Now if AS2 is saying the valuation should be as per cost of production, then we have to differentiate that packing cost in primary packing and secondary packing. So if we know that packing is secondary only, so we can charge that cost to selling and distribution cost center, and that we drive to cost of sales. But this is the point where we have to take some precautions. Second, correct grouping of cost centers. Okay, I have faced many cases where companies maintain 100-150 cost centers. So that cost centers we have to group as per our requirement, means as per our cost statements, and that grouping should be discussed with the management or whatever team is there, that should be discussed. Otherwise, being a third party, we never know that which cost center means what. After discussion with the management, then only we come to know that this cost are booking under this cost center. So we can group that cost center as per our requirement. So as per our requirement means what? As per functions, we are preparing the cost centers like production cost center, repair maintenance cost center, service cost centers, store space cost center, purchase, canteen, likewise. So as per our requirement, we are grouping that 150 cost centers into, let's say, 15 cost centers. So while grouping that cost center, we have to discuss that points with the management or the person who is taking care of the cost audit. Next is plant capacity utilization. Recently we have observed one case that the company has established prior almost 15 years. The capacity was 15,000 numbers manufacturing at that time. Now all the assets are almost obsoleted. Almost. The capacity is down to 50%, but company is still reporting 15,000 as installed capacity. Now manufacturing is around 7,500 metric ton or 7,500 numbers. So capacity utilization is 50% only. As far as cost accountants are concerned, अगर हमें दिखता है कि capacity is less than let's say 60% or 70%, we are charging an sub cost from fixed cost to reconciliation statement. So we are considering that plant was unutilized, let's say for 3 months. In COVID, that was happened, that advisory has given by the institute that whatever days the plant was closed or shut down, that portion of fixed cost we have to remove from the cost of production or cost of goods sold, and that should be reported in reconciliation statement. So it will arrive at actual cost or fair cost. So in that case, company have to, means in coming to our example, in that case company have to revise the capacity also. If the capacity is dropped, then company have to accept and drop the capacity, install capacity. Now how we get the install capacity? That might from first at the time of installation, engineer gives the certificate. Otherwise generally what we take as a base, the MPCB certificate. In MPCB certificate, company have to report the install capacity. MPCB means Maharashtra Control Pollution Board को जो certificate देना पड़ता है. In that, company have to report the install capacity. That generally we take as install capacity. Second, we have to see whether there are any idle assets in the company. Means what? If the company is charging depreciation on that idle asset, that depreciation should not be a part of our cost of production or cost of goods sold. That should be a part of reconciliation statement. So while doing the physical visit or plant visit, we have to see whether the assets are idle or that are not in use, and accordingly we have to ask the question whether you are charging depreciation to P&L or not. If they are charging depreciation to P&L, then we have to remove that from the cost and report in annex part D2 as a reconciliation item. Next, checking whether expenses transferred to non-cost item, if corresponding revenue is transferred to non-cost item, vice versa. Means if I am reporting any income in reconciliation or not for costing column or not for costing statement, if there is a income against that or if there is a expenses against income, that also we have to report in reconciliation statement. Take an example, if I have received the insurance claim in current year only. So what is the cost for that? So insurance claim amount I will take as a reconciliation item. So what is the cost against that? The premium which I have paid. So premium and the insurance amount which I have received, both the items should go to the reconciliation statement. So we have to see whether there is any expenses with respect to or with relation to income, or is there any income with relation to expenses. These are the product profitability analysis point where the annexures are ready based on product profitability. So product profitability means what? If the company are having 100 SKUs, so 100 SKUs cost sheet should be prepared. What cost record maintenance means what? You have to maintain the cost records or cost sheet product wise. Okay, so if I have prepared the cost sheet product wise, then what are the analysis or analytical points? First, in that statement I will check there is RM consumption, there is no closing stock, and there is no sell. So we have faced these cases. There is RM consumption, but there is no stock and no sell. So what is the reason behind that? So we get the reason that we have transferred the material from one project to another project or one product to another product. This is the general answer of every company. So we have transferred the material from one product to another product. Second, there is no opening stock, there is no production and sales. So there is no production, no opening stock, no sales, and there is still closing stock. So that is transferred from other product. Next, there is no opening stock. So these are the points which we generally check in product cost sheet. There is no closing opening stock, there is no production, and still there is sell. ऐसे भी cases होते हैं. There is no opening stock, there is production, no opening stock, there is no sale and no closing stock. Means there is only production, No stock, no sale, nothing. There is opening stock, there is no production, and there is no sale, and there is, there is opening stock, no production, no sale, and no closing stock. So opening stock is transferred to another product. So these are the product profitability analysis point. Next, annexures analysis. How we generally check the annexures point. HSNY sales in A4 and B2 is matching. So A4 में जो हम turnover report करते हैं HSNY, that should be matched with B2. We face one case, only one case, where there is a difference between turnover reported in A4 and turnover reported in B1. Which was that case? In one of the company, the captive consumption was reported as a sales in one entity, in one unit, and cost is reported in as a purchase in one unit. For doing cost audit, we have to knock off the same. But as per as part B, A4 is concerned, where we report the product sales, that should be matched with your P&L sales. So in P&L sale, in sales, they have reported captive consumption. Captive consumption means what? I have produced one good or one item, and that I have consumed in my same company in another unit. So I will show that as a captive consumption. So that entry should not get knock off. So I have manufactured, let's say, one item of 1 crore rupees, and that I have transferred to another unit as a captive consumption. So here I will credit 1 crore rupees. There in plant 2 or unit 2, I will debit 1 crore rupees. So entry will get knock off. But what they have shown sales एज अ जो भी सेल किया था उसको कैपिटल ट्रांसफर दिखाया था, उसको सेल में रिपोर्ट किया और परचेस में भी उसको रिपोर्ट किया. सो अल्टीमेटली इट इज गेटिंग नॉक ऑफ, बट इट इज रिपोर्टेड इन सेल्स ऑल्सो एंड इट इज रिपोर्टेड इन परचेस ऑल्सो. So requirement of A4 is what? The turnover as per A4 and P&L should be match. So हम HSNY जो टर्नओवर डालते हैं उसमें ये टर्नओवर आ गया, लेकिन B2 जब हम बनाते हैं तो B2 में हमें क्या रिपोर्ट करना है? सिर्फ प्रोडक्ट वाइज टर्नओवर ही रिपोर्ट करना है. सो विच इज एज पर कॉस्ट रिकॉर्ड्स. तो कॉस्ट रिकॉर्ड में हम कहाँ पे नहीं दिखाते ही नहीं, हम क्या कॉस्ट ऑडिट रिपोर्ट में कहाँ पे दिखाते हैं? कैपिटल कंजम्पशन थ्रू रूट करते हैं. So there is a difference between turnover reported in A4 and turnover reported in B2. Next, whether other income considered in D3 is same as other income declared in A4. So D3 is value addition statement where we have to report the other income, and that should be matched with our A4 statement. Next, in case of captive consumption, cost and recoveries are correctly booked. So if I am captively consume something, cost should be same as I am reporting recovery in other product or other unit. So both the amount should same, and that reconciliation should be matched. Next, rate per unit for common utilities must be same for all the product. Means what? If I am purchasing electricity, okay, and the electricity rate is same. Okay, how I will derive electricity rate? Total units in the year which I have consumed and total value of the electricity. So I will arrive at, let's say, 10 rupees. But many times it happens that reporting utility cost in part B to B, the rate of individual products are different. Many times we have faced that cases. So we have to take precaution while reporting that figure. Per unit rate for all the products should be same, because at the time of purchase the rate was same, and electricity consumed that might differ unit to unit, and units consumed for one product might be different, for another product might be different, for third product might be different, but unit rate per unit should be same. So we have to take the precaution while reporting utility cost. Then whether interest and penalties mentioned in D6 are considered in D2. Interest and penalties we are generally reporting in D6. If late fee is paid, if interest is paid, then we report that into D6. And that D6 interest and penalty should be reported in D2. D2 means what? Reconciliation statement. So we have to take that correlation also. Then variation in current year and previous year figures is more than 10%. Then we have to see whether reclassification is done. Means we have in last year we have reported the figures in other production overheads. Now currently we are reporting in stores and consumables or repair maintenance. If there is a deviation more than 10%, then we have to see the reasons why there is a deviation. Next, some footnotes we should report in cost audit report if there are such cases. If I have dropped down some cases, if there is a genuine increase in raw material per unit as compared to last year. If you see annexures to the cost audit report, after D6, 3 points are there. First, if there is a major variation in per unit cost as compared to last year, you should report the reasons of the variation. So this is this is first point. Next 2 points we will discuss afterward. But if there is a change in the cost, we have to report the reasons for the difference. Now, what we report generally, if there is a genuine increase in raw material rates per unit as compared to last year, the footnote is due to size, quality and source of the item, there is a true and natural increase in the rate per unit. And how we will know the rate per unit has increased? From part B to A, where we report top 10 raw material consumptions. If last year to current year rate are increased, then we have to genuinely say that there is an increase in the rate. Okay. So this footnote generally we prefer to report that due to size, quality and source of the item, there is a true and natural increase in the rate per unit, and this increase is not abnormal. Second footnote, if in case of project based industry, the installed capacity not be able to be reported. मीन्स जहाँ पे प्रोजेक्ट 2-3 साल चलते हैं वहाँ पे इंस्टॉल्ड कैपेसिटी इज नॉट पॉसिबल टू रिपोर्ट. So in that case also we report the footnote. Considering the heterogeneous nature of the business, installed capacity cannot be reported for the product under consideration. If it is not possible to report, then we have to give the footnotes. In case if the project is cancelled and material is transferred to another project. In project industry it is normal. Customers may cancel the orders, and whatever product we have manufactured, we have to transfer that material to other product. Then cases where there is a transfer of material from one project to another project, the same is appropriately considered and reported in annexures to the cost audit report as captive consumption. As we have discussed earlier कि अगर captive chapter heading change है या material to material shifting है तो वो कहाँ से report कर सकते हैं? तो captive consumption से that we can report. Captive consumption wherever there is change in the product group. These are the notes required to be given. First, explain the difference. Means these notes are required from record rules perspective. So this A4 note was not there in earlier 2014 rules, but from 2019 it is compulsory. So explain the difference, if any, between turnover as per financial statement and turnover as per excise service tax GST records. Means in part A4 we have to report the turnover, in part D5 we have to report the turnover as per GST. So turnover as per GST and the turnover as per books of accounts, there should not be a difference. If there is a difference, we have to report the reasons. Okay. Next, in case of same product, if in case of the same product has different unit of measurement, if I am a manufacturer of, let's say, copper pipe and or let's say SS or MS pipe, I am selling that product in metric ton also, I am selling that product in numbers also. So if the same chapter heading having two different unit of measurement, then we have to report cost statement two different. So for unit of measurement metric ton, we have to report different cost statement, and for numbers we have to report different cost statement. So this is the requirement of rules itself. So in case of same product has different unit of measurement, separate cost statement shall be provided for different units of measurement. Next, all the definitions under para D3 needs to be understood and applied. What is part D3? Sorry, part D4. There is a mistake. In part D4, what is part D4? D4 is ratio analysis, financial ratios, and below financial analysis, the definitions are given. So what is current liability? What is current assets? What is fixed asset? What is net asset? Not net fixed asset. So everything is given in the footnote of annexures to the cost audit report, part D4. So we have to apply, understand and apply the definitions of that to prepare the financial, prepare the part D4, which is related to financial ratios. Next, important notes. Wherever there is a significant variation in current year's figures over previous year figures for any items shown under each para, annexures to the cost audit report, reasons thereof shall given by the cost auditor, that we have discussed already. Second, the unit of measurement for each customs tariff heading wherever applicable shall be the same as provided in Customs Tariff Act 1975 corresponding to that particular custom. Means chapter heading is earlier it was SETA heading, now it is CTA heading. Okay, now we will move to another point, that is reconciliation items. So which are the reconciliation items that we don't consider in cost accounts generally? Donations, interest, then foreign exchange gain or loss. Generally these are the points. Okay, now we will see some other expenses like GST expenses. GST expenses means what? We can say ineligible GST, that is expense out from balance sheet to P&L. Now why this is a reconciliation point? Because here we have to check whether that expense out ITC is from previous year or is from current year. If it with respect to previous year, then we have to separate that amount and report in reconciliation statement. If it is for current year only, then it is the cost of, let's say it is cost of sales or part of cost of production. So we have to see the expenses or GST expenses. Generally the name of ledger is GST expenses in P&L or trial balance. So we have to see whether that expenses are with respect to previous period or with respect to current period. Next, MSME interest. What is MSME interest? Yes? Delay in payment. Okay, if the company has not made the payment in 180 days, then company have to pay interest to the companies which are registered under MSME Act. So MSME interest is also part of reconciliation statement. Detention demurrage charges also part of reconciliation statement, means it is part if we have not taken delivery from port on time, then port authority charges detention and demurrage charges, like that is in terms of penalty only. So that charge is also part of reconciliation statement. Then insurance claim received, that is also then scrap sale. Does anyone feel that scrap sale should be part of reconciliation statement? Yes. In which cases? Correct. If raw material is scrapped out, then that scrapped out means what? Write off. Raw material is write off from the system. Generally it is mentioned as a scrapped. So that also reported as a reconciliation statement. Second, another reason, what scrap we report in part B2 of annexure? Generally process scrap, means the scrap which is generated from the manufacturing process, that scrap is reported in the cost statement. But anything apart from that, that is reported as a reconciliation item. Cash discount, yes. Then if there is a recovery from vendor or customer, or payment to vendor or customer in term of penalty, means non-delivery on time, not delivering quality goods, if likewise as are the reasons, then we have to charge the expenses or income in reconciliation statement. Do you feel any other unusual expenses or income that should be part of reconciliation statement? Yes. Unusual expenses or income? Donation, okay. CSR. Huh? CSR. Is CSR, there is ambiguity in CSR. Generally, those expenses which are mandatory by law are generally part of cost statement. Okay, CSR is mandatory by law. If you have crossed that much profit, you have to give 2% of your net profit to charity. That cost is compulsory or mandatory by law. So should we charge that to reconciliation? That should be part of cost statement. For removing the ambiguity, Institute has released one guidance note on CSR, and it is saying that the CSR expenses should not be part of cost statement. That should be reported as a reconciliation item. So that should be treated as good as it is donation. So earlier there was dilemma कि हाँ वो उसको कहाँ पे लेना है. Now it is clear कि it should be reported in reconciliation statement. It should not be part of your cost statement. Okay. Now form is changed. Now CRA 2 and CRA 4 form is changed in MCA V3 portal. The forms are not available in PDF. That forms or that data we have to go to the MCA portal. We have to log in with our company's login. There we have to fill the form. After filling the form, you can download the form. Now, recently we are facing some issues in filing form CRA 2 and CRA 4. That save button is not operating. Save or next button is not operating. In form CRA 2, they have made some changes. First change is, if you remember, in earlier form, we have to report the appointment nature. Is it original? Is it by amalgamation or demerger, with casual vacancy, or with other reason? Now they have introduced two more points there. They have separated amalgamation and demerger, and next they have introduced with there is one point. Okay, I am not able to open the form, but there is a change in the form. Second, earlier there was no requirement to report or to give the police jurisdiction. Now there is an option to report, or we have to give compulsory police jurisdiction of cost accountant. If my office is in Chinswad, then I have to report my police jurisdiction. I don't know why they required police jurisdiction. And another, earlier there was no provision to report the mobile number of cost auditor. Now we have to report the mobile number of cost auditor. So these are some changes in Form CRA2. Likewise in Form CRA4, same police jurisdiction and this mobile number is mandatory. There are many changes, but due to not opening that PDF, I am not able to show the changes. So there are changes. Now we will move to last part of the session, penalties under cost audit. See, as per subsection 8 of subsection 148, if any default made in complying with the provision of this section, the company, so part subsection A and subsection B, both are different points. The company and every officer of the company who is in default, so part A or subsection 1A is applicable for the company and subsection B is applicable for to the cost auditor. The company and every officer of the company who is in default shall be punishable in the manner as provided in subsection 1 of section 147. Second, subsection B, the cost auditor of the company who is in default shall be punishable in manner as provided in subsection 2 to 4 of subsection of section 147. So penalties provision are derived by section 147. So subsection 1 is for company and company's officials, and subsection 2 is for cost auditor. Okay, if any provision of section 139 to 146, we will see some examples, or we will see these sections in the next slide. Is contravened, the company shall be punishable with the fine shall not be less than 25,000 rupees, but which may extend to 5 lakhs rupees. If company has made default or made any contravene any provision of section 139 to 146, then company is punishable with the fine of 25,000, which may extend to 5 lakhs rupees also. And every officer of the company who is in default shall be punishable with the fine which shall not be less than 10,000 rupees, but which may extend to 1 lakh rupees also. So for company, there is a penalty of 10 lakh rupees, and for the officers or the person who is doing that offense is 10,000, and that may increase up to 1 lakh rupees. What is section 139? It is appointment of auditor. See, section 139 to section 148 are applicable to statutory auditor, and same are applicable to cost auditor also. Okay, so if company has made any default while appointing the auditor, auditor means here cost auditor, then company is in default. Section 140 is removal, resignation of auditor and giving of special notice. If auditor has resigned, then company have to file ADT 3. Am I right? So filing ADT 3, company have time limit. So if the company has not filed ADT 3 within time, then company has made the default. So the provisions of these sections are applicable to the company. Then section 141, eligibility, qualification and disqualification of the auditor. Then remuneration of auditor, powers and duties of auditor and auditing standards. Auditor not to render certain services, means if the company, if the auditor is solely giving a service of cost auditing, he should not give other services, like he is a GST auditor, he is a investment advisor, likewise internal auditor. So if the auditor is giving multiple services, then the provision of this section will apply. Then auditor to sign the audit report, means every annexure or every statement of audit report should be signed by the auditor. So these are the applicable sections. If company has made any default in these sections, the provisions of subsection 1 will apply to the company and penalty will attract. Okay. One section 146 is auditor to attend the general meeting. Now subsection 2 of section 147, if auditor of the company, means this is applicable to us, if the auditor of the company contravenes any provision of the section 139, section 144 and section 145. So out of that 6 sections, only 3 sections are applicable to the cost auditor. So first is 139, that is appointment of cost auditor, section 144 and 145. So 144 is auditor not to render certain services. If he is providing many services apart from cost auditing services, he is making default and he is attracting the penalties. Section 145, auditor to sign audit reports. If he has made any default, means he is not signing the report, and likewise then the penalty provisions are applicable to the auditor. So the auditor shall be punishable with the fine which shall not be less than 25,000 rupees, but which may extend to 5 lakhs rupees also. Okay. So minimum is not less than 25,000. So minimum is 25,000 is there. Okay. And it may extend up to 5 lakh rupees or 4 times of the remuneration we have charged or fees we have charged to the company, whichever is less. If the cost audit fee is let's say 1.5 lakhs, so 4 times of 1.5 means 6 lakhs rupees, and company as per officer or it may vary officer to officer, they have charged 5 lakhs rupees. So 5 lakhs and 6 lakhs, whichever is less, 5 lakhs rupees. So cost auditor have to pay 5 lakhs rupees to the government, provided that if an auditor has contravened such provision knowingly or unknowingly. अभी ऐसा है ऊपर वाला तो हो गया, वो unknowingly हो गया. If he has done the default willfully and knowingly, the provisions are different. With the intention to deceive the company or its shareholders or creditors or tax authorities, he shall be punishable with imprisonment for a term which may extend to 1 year, and means he may go behind the bar for 1 year, and with fine which shall be not less than 25,000 but which may extend up to 25 lakhs rupees or 8 times of the remuneration. So whichever is less. So if he has done willfully or knowingly, then the penalties provisions are so heavy. Next, where an auditor has been convicted under subsection 2, means auditor abhi ho gaya hai, he has convicted under subsection 2. So what will be the next procedure or next step? He has to refund the remuneration received to him to the company. Whatever remuneration he has received from the company, he has to pay back to the company, and pay for the damage to the company, statutory bodies or authorities, or to the members or creditors of the company for loss of arising out of incorrect, misleading statement of the particular made in his audit report. So whatever damage is caused by the cost auditor to the company or their stakeholders or their creditors, that everything has to bear by the cost auditor. For that, for recovering the refund or recovering the penalties from the cost auditor, what government has done? The central government shall by a notification specify the statutory body. Government may appoint a statutory body or authority or officer for ensuring prompt payment of damages to the company. So central government may appoint a person or the body to recover the amount from the cost auditor. Person clause 2 of subsection 3, and such body, authority or officer shall, after payment of damage to the company or person, file a report with the central government in respect of making such damage in such manner as may be specified in the said notification. So government can appoint a officer or any authority to recover the payments. Okay. Now, at the time of filing forms CRA 2 and CRA 4, we generally pays the fees. So what is the criteria to pays the fee is based on the share capital. If the share capital of the company is less than 1 lakh rupees, the fee is 20 rupee per document. Per document means what? For CRA 2 or CRA 4. If the share capital of the company is less than 1 lakh rupees, 200 is only the fee. Likewise, if the share capital is 1 lakh rupees to 5 lakhs rupees, the fee is 300 per document. If the share capital is 5 lakhs to 25 lakhs rupees, the fee is 400 rupees. If it is 25 lakhs to 1 crore rupees, fee is 500 rupees. And for more than 100 crore share capital, 1 crore share capital, fee is 600. Now generally we pay 600 because the criteria is 1 crore rupees. So generally the fee is 600 rupees only. It means that the share capital of that company is more than 1 crore rupees. Now additional fees means late fees we have to pay. If the delay is up to 30 days, then the additional fees means late fees 2 times of the normal fees. Means if it is up to 30 days, what is normal fee in case of 1 crore share capital? It is 600 rupees. So 600 into 2, 1200 rupees will be the penalty for late filing of the form CRA 2 or CRA 4 up to 30 days. If it is 30 to 60 days, it is 4 times. It is 60 to 90 days, it is 6 times of the normal fees. If it is 90 to 180 days, it is 10 times. And if it is more than 180 days, there is only limit up to 12 times of normal fees. So beyond that means if the share capital of the company is 1 crore or more, the maximum late fee will be 7,200. If he has made the delay, let's say it is for 1 year, 2 year or 3 years, the maximum late fee is 7,200. Okay, this is all about the session. If anyone have any question, you can ask. Otherwise, we will close the session. General questions. This session is basically was on experience and hypothetical cases we have taken to discuss with you. If anyone, yes. No, there is no responsibility of the auditor because the provision itself says that the annexures should be provided by the management to the cost audit report. So to comment on cost audit. So the criteria is, we know that cost auditor have to report or cost auditor have to give the report to the company within 180 days from the closure of financial year. But if the cost auditor don't have received the data to check or to audit the cost records, there is no liability on cost auditor because the annexures have not received to us for auditing itself. So there is no penalty or there is no consequences to the cost auditor. Yes, sir. Plant itself. Correct. Okay. No, is there any recovery from the employee? If there is no recovery, it is as good as the self-consumption only. So self-consumption is for admin only or admin or labor quarters only. So there is no applicability of cost audit. But in that point, the cost records are applicable to the electricity because we have to maintain the electricity raw materials required for generating electricity, like water, steam, depreciation to generate the to operate the that captive generating plant. So whatever expenses are there, that should be maintained and the cost record should be maintained for captive generating plant activity. then applicability have to check. Yes. Means there is no provision that that should be sold outside of the company or inside of the company. If they are selling inside of the company, then need to check, because if there is a recovery from the employee, need to check. Yes, anything else? Should we close? Okay. हवंय तुम्हाला?
If there is no any question, shall we conclude the session? I will request CMA Sanjay Ahuja sir, kindly give you a vote of thanks for this wonderful session.
So thank you so much everyone for coming on this day, and thank you Rahul ji for this informative session, refresher for a few, and bringing us closer to the recent changes. So if there are no more questions available, I think thank you very much, and a big round of applause for Mr. Rahul. Thank you so much.